and welcome to Finextra. I'm Emily Haller and I'm here with George Evers of VocaLink, and we're at Money 2020 Europe in Copenhagen. Thank you for joining me, George.
Hi Emily.
What are the top trends driving global progress to instant payments?
So Emily, I think kind of since we last met, a lot has kind of changed on the global landscape. So what we've seen, let's do a kind of a global roundup. So in the US now, a very committed drive to the delivery of an infrastructure for the banks from the clearinghouse. Made a decision late last year with aggressive timelines for having that infrastructure available for the banks to connect to, but also a really open approach to access that infrastructure, and that's been heavily supported by the Fed process in the US, which has allowed good dialogue around instant payments, good interaction from the community and engagement more broadly. So I think we have very high hopes for how that will develop, and that's been a market where there hasn't been strong regulatory pressure to drive that. It's been driven by the market, for the market, and therefore we see the outcomes of that as being some really creative uses of that new infrastructure. When we cross into Asia, we're directly involved in working with National ITMX in Thailand and supporting them on a project that will drive the adoption of instant payments using ISO 20022 standards. But that has been driven by some regulatory change. So the Ministry of Finance introducing a concept called NEID, which is the creation of your national ID number connected to a bank account to allow them to distribute money directly to participants who need government money, but also that ID to be used as a simple and easy way for people to identify people they want to get money to and to move money to as well. So a very strategic investment for them, but will drive a lot of banking inclusion and also will drive new use cases for instant payments as well, so very exciting there. And then back here in Europe, real momentum now growing within the communities. I think 12 months ago the discussion was all about, yes, we need to move towards instant payments. We've now seen very definitive moves with Belgium, Italy, the Netherlands, all in kind of detailed processes to both engage with their communities. So the process has been going on for over 12 months in the Netherlands, but now to start moving towards what solutions are going to be put in place nationally to support the ambitions of those territories, and then also how do they solve the other challenges that exist within Europe in terms of cross interoperability across those different infrastructures. But again, kind of regulatory intervention has been low and really pragmatic. So the regulators have said, we think you should move towards instant payments. And actually we think there are problems you need to solve if you're going to have national infrastructures, and they're really around interoperability so people can bridge across those different areas. So, just a mass movement towards instant payments, very exciting times.
How's regulation impacting the landscape?
Okay, so I think that's probably changed quite a lot, certainly since the regulatory change that drove the implementation of faster payments in the UK. So I often kind of reflect on the regulatory drivers for moving to instant payments. When a regulator says you've all got to move towards instant payments, as or faster payments, is what happened in the UK. The banks can take a view as to how they qualify that, but the pros of that are is everyone is working to the same timeline, everyone is aligned around meeting those objectives, and they're going to get there because otherwise they get in trouble with the regulator. What it misses is the community. It doesn't have the time or the space to, I think, get as ambitious as it could be around the new infrastructure, and you get more of a mixture of ambitions between the different banks as to what they're going to do for it. And I think that slows down innovation that can be built on the top of the rails. What we're seeing in other territories, so especially the US, where the regulator has not been aggressive in terms of setting a timeline for the territory, not been aggressive in setting things like standards, etc., or forcing those on the community. You have the commercial sector, you have the banks, and you have the fintechs, all contributing to the discussion about what can be done with this. What is the value we can drive out of this? So what's the value we can drive out of not just a faster payment, but out of the ISO 20022 message set to deliver things like requests for payment services for corporates? How will that help them with reconciliation, requests for refunds, etc.? So the community starts to think much more creatively about what it's going to deliver on top of that. And equally true in other markets. We've seen in Singapore, they've moved quite quickly now to the delivery of a central directory service, proxy service, a bit like Payem in the UK, that can be used across that infrastructure. So you get much faster to customer innovations and value creation for the community, I think, with a lighter touch regulation. Although the one kind of downside is not everyone moves at the same time. So if you want to be a stay behind bank or a laggard, or you can't see the investment case, then you can stay back, and that does have a potential impact on things that are important around payments, which is ubiquity. Can I reach all the accounts I want to reach?
So how can payments players successfully innovate around these new infrastructures?
I think the first thing is they have to think of them as a platform from which to innovate. I think there's a tendency to focus very much on it's just a faster payment, the same as we've got at the moment, but faster, and I think they need to elevate their thinking around that. So where we're seeing innovations is thinking about the ISO 20022 message set to deliver much richer data with that payment, much richer information in terms of things like request for payment, but also to think about really some more radical ideas. A is what customers' expectations are about how quickly money will move. So most people now using mobile banking, they expect the money to be able to move quickly and easily between themselves and other players. P2P is often an example where people will look to replace cash, and there's value in solving those problems. I think it will take time, but people will start to use that more commonly. And then there are other more radical ideas. So what we're looking at in the UK with Zap and the Pay by Bank app, which is really to build an entire new ecosystem across those real-time rails, and think about how you transform payment experiences on areas where cards just don't work very well. So for online commerce and e-commerce and mobile commerce, having to key all that card information in is a lot of work and a lot of effort. It's insecure, it's subject to security breaches, etc. Merchants have to pay quite a lot of money for those services and have to wait to get paid. What we've done with Zap is build really a digitally native capability that uses faster payments to deliver the payment message, but also uses things like the request for payment, so reverses that payment flow, eliminates the need for customers to enter their card information or share sensitive information, but also for the merchants delivers their money sooner, delivers their money through a 24-hour cycle over the weekends, etc. So delivers all the benefits of real-time payments as well. So I think you have to be clear that you genuinely are creating a new value proposition for all of your customers. I think the other thing for banks is to think across all of those customer groups and think about the propositions you can drive for your corporate customers, how they can manage their liquidity much more effectively and get paid or pay at the point where they want to, rather than delivering batches of files that process a few days later, and also to think about new use cases for that infrastructure as well, how you can support government in distributing benefit payments, how you can support insurance companies in getting money to people when they really need it. All of those things become a capability as well. And I think there are some societal benefits as well for people that get paid on daily or weekly wages. That's typically a cash economy. With instant payments, you can keep that liquidity in the banking system. They can keep that liquidity in the banking system rather than having their cash at the end of the week or having to wait a few days before they get paid for work they've already done. So lots of opportunities, I think, but you have to have an open mind and an attitude that it is a truly transformational capability for you and your customers.
Thank you very much.
Thank you, Emily.
And thank you for watching.